what do I think kind of happens? You might see a little initial volatility. I know in 2020 during the March huge liquidity deflationary event of COVID, Bitcoin went down quite a bit. You could potentially see another move in a very short period of time where Bitcoin sells off with that deflationary force. But I think the bounce coming out of it is going to be massive. I think the price of Bitcoin by the end of 2024 is definitely over 100,000.
Hey guys, welcome back to Everyday Finance. In this video, Preston Pysh discuss about Bitcoin. According to Preston Pysh, one of the intriguing aspects of Bitcoin is that it allows us to view the blockchain and the public ledger, allowing us to see the value of the currencies are shifting. And you know, throughout the history of Bitcoin, you've never had the quantity of coins that have remained unchanged for a full year. As you have accurately, you've been under a lot of pressure to sell at this particular moment because it was around 1 to 1.5 years. We were, after all, nearly 100% higher this year in Bitcoin. However, there was a lot of sell pressure before. To this 2023 move, those coins were consolidated in the hands of individuals who were extremely powerful, possess a very modest basis, likely less than $500. And they can go on to rely on volatility. So what happens, Preston Pysh say in my opinion, is that there may be some initial volatility in 2020 amid the massive COVID-19 liquidity deflationary event that occurred in March. Bitcoin saw a significant decline in the not-too-distant future. There might be another shift where Bitcoin sells off when that force of deflation arrives. And lots of things Preston Pysh discuss, so please watch the video to end. And like, share, subscribe our channel Everyday Finance. Thanks.
So one of the interesting things about Bitcoin is we can peer into the public ledger and we can look at the blockchain and see how much the coins are moving around. And throughout Bitcoin's history, you've never had the amount of coins that haven't moved in a year as you have literally now, right at this moment in time. And so you've had a lot of sell pressure for, it was about a year to a year and a half. I mean, we were up over 100% this year in Bitcoin, but leading up to this move that we've had in 2023, you had intense sell pressure. And so those coins got consolidated into very strong hands. They got consolidated in the hands of people that have a very low basis, probably sub $500 basis. And they can continue to squat on volatility. So what do I think kind of happens? You might see a little initial volatility. I know in 2020 during the March huge liquidity deflationary event of COVID, Bitcoin went down quite a bit. You could potentially see another move in a very short period of time where Bitcoin sells off with that deflationary force. But I think the bounce coming out of it is going to be massive. I think the price of Bitcoin by the end of 2024 is definitely over 100,000. How far beyond that, I have no idea, but I would be really surprised if you weren't over $100,000 of Bitcoin by the end of 2024. It's really kind of the debt to GDP at 120%. Just when you're looking at the math, the bond math, the fact that you've actually seen inflation, which you haven't seen for more than a decade, those kinds of things are demonstrating to me that you're actually starting to see the systemic breakdown of all these years, these decades of central bankers manipulating a fiat system. And so it's here. The next deflationary wave and the response that comes with it, I think, is going to really start to blow the lid off of it. And so, yeah, I mean, it's just the math. It's where we're at. It's that, you know, like leading up to the 2020 COVID, when we had inflation and like the 10-year treasury got down to like 50 bips, like a lot of people were talking about how like this just can't keep going on and on, right? But there was literally no evidence that they could produce inflation. It's different now. We have proven that they can create inflation. We have proven that the math is not working anymore. And when we look at how much liquidity is going to be added on this next wave, I think you're kind of at an end game here. Now, whether they're able to go through another cycle and maybe inflation only gets up to 15% or something, and I'm saying only up to 15%, is yet to be seen. But we're definitely not in a 40-year bull market in bonds anymore, which I would argue was the bedrock of everything in finance and all economic calculation for the last 40 years. Those days are over. There's a new reserve asset, in my humble opinion, that the world is coming to. I obviously think it's Bitcoin, but that's for the audience to figure out what they think it is and make their decisions. All you can do is just take, like, if we took today, we can go back 4 years and we can look at what that compound annual growth rate is. And if we did that for every discrete day from yesterday to inception, you pick the 4-year period during that performance, and I'm telling you that the performance is between 24 to 78% annualized. What you're describing is the vulnerability with gold and how it has been suppressed as a cash settled derivatives market. With Bitcoin, there's two key nuances that I would press upon people listening. First, a majority of the Bitcoin that has already been issued is in extremely strong diamond hand type people that understand this argument and how gold has been suppressed for a very long period of time because of fiat money and cash settled derivatives. The last thing that a hardcore Bitcoiner that already understands this, because these coins are already in their hands, they're never going to own an ETF product ever. And primarily because with a Lightning network that I can take my coins and on a node, I can collect routing fees for hosting those coins into channels. Like, I can't do that if I own an ETF. And I'm definitely not going to trust BlackRock or anybody else with my Bitcoin. And neither is any other Bitcoiner that has a sizable amount of coins. So when we look at how many coins that have already been issued, we're already at, like, what, 19 million out of the 21 million coins. And the hardcore Bitcoiners that actually understand what they own aren't going to, own an ETF product. So that leaves a very small amount of Bitcoin to go into those products from a just sheer proportion. When we look at how much gold sits in these vaults, that, like the GLD ETF, right? Like, the proportion of gold isn't sitting in the hands of private individuals. It's sitting in central bank coffers, or it's sitting in ETF vaults. So it's really difficult for a person to basically call that system when there's so much Bitcoin floating around to be put onto exchanges and go point to point between individual owners. The second thing that I would tell you is, you could hold up your smartphone over this feed that we have right now, and if let's say you owed me 1 Bitcoin, I could take settlement for that Bitcoin through this feed that we have on this call right now. I could say, stick up your phone. I'm going to scan the barcode and I'm going to collect my 1 Bitcoin settlement. I could see it hit the mempool. It would maybe take 10 minutes to clear, but I could see the transaction hit the mempool instantaneously if you held up the QR code on this video feed right now. Anybody who actually understands why you take physical custody of something because you don't want the government to confiscate it or whatever, understands this value prop, especially if they're doing it in any type of meaningful amount of millions or billions of dollars. They are not going to settle for some custodian to perform that and audit it with their node like I would if I was collecting any amount of Bitcoin from somebody. So Bitcoiners understand this really well, and that's what differentiates it significantly from gold and why it won't be held captive to cash-settled derivatives.
Regarding Bitcoin, there are 2 important details that Preston Pysh would like to emphasize to people. First things first. The bulk of the Bitcoin that has been distributed thus far is a really powerful diamond hand kind of person who comprehends this dispute and the long-term suppression of gold prices due to the usage of fiat money and cash settlement derivatives. The final point that an avid supporter of Bitcoin who already understands this, they already have coins, so they will never be the owners of an ETF product. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.